Hello everyone, welcome to Options with Doug, streaming live normally on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap YouTube and the Bookmap Discord and the Bookmap YouTube channel. Of course, this week, because of the Monday holiday, I'm streaming on Wednesday and Friday today. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. Main name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Jug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Hello, Mark. Welcome. Glad you're here. Just want to let everyone know that Bookmap is having a fun trading competition, this trading companion competition. I'll show the website in just a minute. I did post the link in Discord as well. So on fun competition, you want to take a photo of your pet next to your trading desk for prizes. All right, for those of you who've seen my webinars before, please bear with me. If there's anyone new here, I want to make sure they understand my approach to trading. So here's my approach to trading. These are the key tenets to my approach to trading. I believe options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to the large cap tech stocks and the equity index futures. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. And of course, again, ES and NQ are derivatives, and the current contracts will expire in a couple weeks. So they will cease to exist in a couple of weeks. So that's why I say they're derivatives of the underlying indexes. The focus of my presentation today and the focus of the Options-Jug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning. And I use positional analysis. I'll look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I'll look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Jug chat channel and Bookmap Discord, as well as the chat in YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Floyd's Garage. Welcome. Glad you're here as well. Here's my agenda for today, Friday, September 5th. First of all, I wanted to go over news items, economic data, and events for today. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started. Of course, today the jobs report came out. And actually before that, let's take a quick look at the trading competition that I mentioned earlier. Began September 2nd, ends September 30th. Again, take a photo of your pet near your trading desk, post it on Instagram, X, Facebook, or LinkedIn for several prizes, including 1 month of Global Plus. All right, let's move on. Big news of the day. Jobs report out at 8:30 a.m. Eastern Time. Came in much less than expected, much less than the previous number. And we'll take a look at the reaction of the market in just a minute. So we can take a look at the reaction in the CME Fed Watch tool. So what we're looking at here, the current Fed's target rate is 425 to 450 basis points. So right now, this is showing an 88% chance of a 25 basis point cut, and now about a 12% chance of a 50 basis point cut. So this is yesterday, pricing in a 96% chance of a 25 basis point cut, 0% chance of a 50 basis point cut, and now that has changed for today. Again, 12%, 50 basis point cut, and about 88% for a 25 basis point cut. And the Treasury yields are falling today. So the 10-year is almost down to 4% now. All right, so that's the impact of the jobs report. Let's take a look at the S&P 500 futures. We'll take a look at the impact in the futures and much more about that as we go on. So the initial reaction, there's the 8:30 data release. And the S&P 500 found resistance just below the 65.35 call wall. Again, much more about that. Traded down to the put wall at 64.55. That's also the volatility trigger. And down below that, and down below the 64.50 level, before recovering in the positive gamma down below. And that was also down below the ES lower data expected move. All right, so very, very interesting day in the S&P 500, and we'll take a look at the roadmap for these moves in just a couple of minutes. All right, so that's the data for today. So this is, again, the ES futures and Bookmap. And before I spend more time on this chart, let's step back. Let's take a look at our higher time frame. So now we're moving on to positional analysis, starting with the S&P 500. And this is a 1 year, 1 day chart of the SPX, the underlying index. So overall, the rally that began in early April continues with a low of around 4,800. The rally continues. Pullbacks are becoming more frequent now, but SPX with every pullback is still making higher highs and higher lows. So let's take a look at that now on a 30-day 1 hour chart so we can get a closer look at more recent price action. So here are the most recent pullbacks. Then you might, depending on what happens today, this might be considered another pullback. But again, overall, SPX making higher highs. And again, today, traded up earlier today for an intraday all-time high just below the call wall. That's at 65.35. All right, let's take a look at the levels on this chart. And note that some of these levels were influenced by the Captain Condor, Iron Condor, that we'll take a look at in just a moment. All right, so let's start with the lower levels here, the 60, actually let me zoom in on this. We'll zoom in from, actually squeeze that down a little bit, then zoom in from here. So we can get a closer look at these levels. All right, so I'm going to point out the key daily levels. There are 4 key daily levels. First of all, the volatility trigger and put wall that I mentioned before, around that level, or actually a little bit lower, acting as support. So the put wall is a strike with large negative gamma. It can be expected to act as support. And the volatility trigger is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note that is based on Spotgamma's older legacy model, their total open interest model. We'll take a look at a view of gamma based on their newer synthetic open interest model. All right, so that is the put wall volatility trigger. Let's take a look now at the absolute gamma strike. That's at 6,500. That's a strike with largest absolute positive and negative gamma. That level did move up from yesterday. It's been at 6,000 for quite some time. Did move up to 6,500 today. We'll see if that lasts. So again, that's a strike with largest absolute positive and negative gamma. That is where most of the gamma-weighted open interest is concentrated. Then finally, the call wall, now up at 65.35, again associated with the Captain Condor, Iron Condor. And note all 4 levels for the SPX did move higher, so that's overall very bullish. But again, the volatility trigger put wall and call wall were all influenced by this Iron Condor, so most likely will change on Monday. All right, let's take a look at the expected moves now. These are shown with the dashed lines here. First of all, with the weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place at the same place for the entire week. And SPX trading looks like almost right in the middle of that, so essentially unchanged for the week. That's the weekly expected move. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. I do post those levels. I post expected moves for SPX, ES, and NQ every day, the day before, in Bookmap Discord and the Options Dash chat channel. Watchman, glad you're here. Welcome. Sorry to hear about that. All right, so that is the SPX trading down now right around the lower daily expected move, the volatility trigger and put wall. So we'll take a closer look at that right now. Let's go to a 1 minute chart. So there it is, the S&P 500 moving down again. Going down to test that cluster of levels. Back to that in just a minute. Let's check the 1 minute chart. So this is showing 4 days worth of data. So beginning Tuesday, Wednesday, Thursday, Friday, gap up today. Just below the call wall at 65.35. Sharp drop just after the open. And down to this cluster of levels, which was the put wall volatility trigger and then the lower daily expected move just above that. All right, that's SPX. And let's take a quick look at SPY. All right, let's zoom in on this. So SPY for today. Again, a rally just after the data release. Found resistance right around the 652 level. Dropped down below the 650 absolute gamma strike and call wall. And now trading down to the SPY 645 volatility trigger. Trying to find support at that level. All right, that's SPY. Back to Bookmap now. So I've just spent several minutes looking at SPX and SPY levels. I have those noted on my Bookmap chart. So here's the call wall that I mentioned before. So that's the SPY 652 level, just below the SPX 6535 call wall, key resistance from earlier today. And then this cluster of levels down below. So that is the ES lower daily expected move, the SPY volatility trigger just above that, and then two key SPX levels. That's the 6455 put wall volatility trigger, and we'll take a look at that in just a few seconds. All right, then the 6450 large gamma 2 support level just below that. All right, so let's get a closer look at where those levels come from. Then we'll take a look at NASDAQ. So I'm going to go to the trace tool here in, this is Spotgamma. This is available to Spotgamma subscribers. And I'm going to step back in time. I'm going to go back to just 10 minutes before the data release. All right, so what's clear here? This is Captain Condor, an iron condor. So this is showing market makers gamma exposure in SPX. Blue line showing positive gamma, red line showing negative gamma, and also blue shading showing positive gamma. So at the morning, just before the data release, there was SPX was trading in a zone of positive gamma, sandwiched in between this iron condor. So that was a short call vertical up above for the Captain Condor, and a long call vertical for SPX for market makers above, and then a short put vertical for Captain Condor down below, setting up the iron condor that was at 65.35, 65.40. That's for the call side, and then the put side 64.50, 64.55. All right, so the short strikes of the iron condor at 65.35 call wall, and the 64.55 short put strike of the iron condor. And again, market maker's position is positive there. All right, so that set up the roadmap, support and resistance levels for the day. And let's step through time. And remember, gamma is greatest at expiration at the money. So we'll step through time. So there was a brief rally in the morning after the data release. Price stalls just below that 65.35 level, call wall. Let me zoom in just one notch here and make that a little bit clearer. All right, so notice how the gamma here on the put side starts to diminish as price moves up toward the call side. This continues stepping through time, so this is just after the cash open. And traders cannot move price through that 65.35 level, and then SPX starts to drop, and the gamma at the 65.35 level, that call side of the iron condor, gamma diminishes as price drops lower. Gamma increases down toward the put side. Positive gamma support down below. Now we're at the current time, and the blue gamma support continues now, and the gamma at the call side is all but diminished. All right, so that's the current picture. Right now, SPX and positive gamma, this is based on Spotgamma's newer synthetic open interest model. All right, so that's the S&P 500. So currently finding support in that positive gamma zone. Now, just above the that 64.55 put wall volatility trigger. All right, let's move on to NASDAQ. All right, this is the NQ futures of Bookmap. Let's step back. Let's take a look at the underlying index charts before we get to this chart so we can see the levels in play. And by the way, I forgot to mention for ES, there's an 8-point difference in SPX and ES right now. So that ES to SPX offset is 8 points. Right now it looks like maybe 8.5, somewhere between 8 and 9. It's a little bit closer to 8. So I'm using 8. So SPX 6,500. I'm showing at ES 6508. And I do post those index relationships that I use every day in Discord. All right, back to NASDAQ now. Again, we're going to take a look at the underlying index charts. So just like the ES, I do mark NDX and QQQ levels on my chart. So let's take a look at those underlying indexes. We'll start with QQQ. All right, so notice the drop at the call wall just after the open. That's at 580. That's the highest Spotgamma level for QQQ, is the 580 call wall. Looks like price did find resistance closer to 581, but dropped below the call wall, and now just like SPY, trading right around the volatility trigger at 574. Now chopping in a narrow zone between 574 and a large gamma 2 level at 575. All right, that's QQQ. Let's take a look at NDX, the other underlying index. Zoom in on this. And very nice mechanical move up yesterday, mechanical move down today. Levels in play. 23,822, that's a combo 4 level. And then here's the call wall, absolute gamma strike at 23,725. It's been at that level for a couple of weeks. All right, back to Bookmap now. All right, key resistance for NASDAQ, for NQ, is the NASDAQ upper daily expected move. And I did post that level yesterday in Discord. I posted that at 7 p.m. yesterday. All right, so now again, NASDAQ trading at a narrow range since about 11:45. All right, let's take a look at some setups. I'm going to start with the S&P 500. Any questions about this so far? And the support and resistance levels laid out by Trace. Very, very nice. All right, so let's take a look at some setups now. So again, starting with the S&P 500, let's shift over to Hero. Let's see what options traders have been doing today. I'm going to start with the S&P 500. And there are two signals that we can take a look at for the S&P 500. There's the S&P 500 index signal. That's what we're looking at now. So this is showing options trades and market maker hedging activity for the S&P 500 index components, a couple of which we've already looked at, SPX and SPY, and it also includes ES and XSP. I've already separated out puts and calls. The orange line shows calls, the blue line shows puts. Falling lines, which in this case is bearish momentum, this indicates traders are buying puts. The direction of lines indicates delta. So traders buying puts, selling calls. Market makers take the opposite side of those trades and they hedge their delta exposure by selling ES futures. Let's zoom in on this just a little bit. So after the open, there was a pretty lackluster response. Hero signal's pretty flat, a little bit of a peak pattern here, and then right around 9:52, the call line and the put line start to move lower and price drops. Note the flow alert that came in right before that big drop lower. And the flow alerts indicate significant options activity and often can indicate a signal, a reversal in hedging flow, or in this case a big drop that happened just a couple of minutes later or at that time. Pretty timely flow alert. All right, then the call buyers now have come in and now put sellers. And SPX, that's the white line there, SPX price, trying to find support at that put wall and that positive gamma shown in trace. All right, so let's go to Bookmap. Let's take a look at that short that was right around 950. Well, actually, let's take a look at the S&P 500 equities signals first. So again, this is showing options trades and market maker hedging activity for the S&P 500 equities, all 500 stocks in the S&P 500 index. Took a little while longer for initially, traders are buying calls. That didn't last long, and that shifted pretty quickly. Traders started selling calls, buying puts again right around 9:52, and that is very bearish momentum. And now these lines are pretty flat. So traders taking some positive delta positions in the index components, but as far as stocks go, pretty flat. So big drop down to about 1110. Traders take the foot off the gas, and SPX trying to find support in that positive gamma zone, in that cluster of levels, the hedge wall, put wall, or volatility trigger put wall. All right, back to Bookmap. Let's zoom in on this. All right, so here's the reaction at the data release. Overall bullish. Pull back to the SPY 650 call wall after the initial reaction. Then aggressive buyers come in, shown by the green volume dots, and they just cannot find the energy to break above this 65.35 call wall. Aggressive sellers start to come in. That's shown by the magenta volume dots. And price drops. Nice steady drop for about an hour down to this cluster of levels. Again, the positive gamma down below. The ES, lower daily expected move, the SPY volatility trigger, and the SPX put wall and volatility trigger. And then on down actually below the 64.50 large gamma to support level. and that was the long strike of the Captain Condor's put spread. All right, so there's the setup. Note also in the subchart here, starting about this time, all three lines in the subchart moving lower. So what this is showing, the blue, dark blue to magenta line is showing cumulative volume delta. It's pretty obvious with all the magenta volume dots up above. The light blue line showing large traders selling with iceberg orders. Looks like there are several large iceberg orders. So again, large traders joining this move down with iceberg orders they use to hide their size. And then finally, sell stop orders also fueling the move lower. So pretty clear signals in Bookmap and Hero, and then the target provided by Trace. Now chop. Note the lines in the subchart have pretty much flattened out. So the move for today has already been made, although the last couple of days there have been some aggressive options trades in the last few minutes of the day. So we'll keep an eye on that, see if that starts during this session. All right, so it looks like now the SPY volatility trigger and the ES lower daily expected to move are holding. All right, let's take a look at NASDAQ. Pretty similar price action. Again, resistance at the NQ, upper daily expected move. Let's take a look at Hero, see what options traders are doing. All right, so just like the S&P 500, there are two Hero signals that we can take a look at. The first is the NASDAQ index signal. So this is showing options trades of market maker hedging activity for the NASDAQ components that we've looked at earlier, and that is NDX and QQQ. Another peak pattern right around 952. Initially, for a few minutes, traders were selling puts, buying calls. That quickly reversed. 20 minutes after the open, traders started buying puts, selling calls, and price dropped lower. So this is showing price, the white line for NDX. And here's the reversal lower. Then the call sellers and put buyers took the foot off the gas. Now it looks like they may be starting up again, selling calls, buying puts again. All right, we can look at another signal for the NASDAQ. That's the Mag 7 signal. This is showing options trades, market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. And we'll try and take a look at all those stocks today. All right, so the price is for QQQ. That's the white line price for QQQ. There's that brief bullish opening drive for about 22 minutes. Then traders started selling calls, buying puts. Price breaks lower till about 11:10. Options traders take the foot off the gas. Now it looks like they have started selling calls and buying puts again. All right, back to NASDAQ now. Let's zoom in on this. So just like the S&P 500, there was a move after the data release, pullback, aggressive buyers, and price stalls at the upper daily expected move. A little bit of a brief bullish opening drive back to that upper daily expected move, and then price drops. Now in this case, it looks like large traders were buying. They were fading that move with iceberg orders. but it looks like sell stop order shown by the yellow line was helping to drive that move lower. All right, so again, remember the call sellers and put buyers took their foot off the gas about 11:10. NASDAQ tried to recover. All right, so that's about a 150-point recovery in the NASDAQ, and now chopping around between 23,600 and 650. All right, any questions about the indexes? All right, I'm going to start with stocks now, and I'm going to start with a stock of the day. That's Broadcom. So Broadcom reported earnings after the close yesterday, and apparently it was a pretty positive earnings report. And one of the key pieces of information was Broadcom indicated that they had a new customer with a $10 billion order. Now, it later turns out the Financial Times is reporting that new customer is OpenAI for, again, $10 billion worth of Broadcom's custom AI chip. So Broadcom was up pretty sharply at the pre-market and then reversed lower. So right here, this is the opening print, right around 356, and then dropped sharply from there, now trying to recover like the indexes. So let's take a look at that. Let's see what options traders are doing. Let's go to Broadcom. Zoom in on this just a little bit. So you can see from the open again, from the opening print, and this is showing it a little bit lower than 356. Yeah, I didn't check that opening in Thinkorswim. So anyway, from the open, traders were selling stock. There were some call buyers for a very brief bullish opening drive, then quick call exhaustion, and then price drop. So there's no call buying fuel driving price higher, and Broadcom dropped. Now it looks like some call buyers have started to come in, call buyers coming in, starting right around 11:20. Note for the day, this is positive delta notional, so net for the day, traders are buying calls. They're also selling puts. That started, looks like just after 1 p.m., maybe 1:20, also positive. This is selling puts. So they're buying calls and selling puts for the day. All right, so there are many ways to play that. One way, of course, is just to go short, look for this call exhaustion, but kind of a swing trade, longer term trade, or a 2-day trade. Let's take a look. I'm going to show a couple of simulated trades. So first of all, this is just a simulated trade showing a vertical trade from yesterday, buying a call spread. So this was risking $115. This is showing just one contract, risking $115 to make $135. And then spread this off later on today, selling a call spread, making a call condor. So looks like risking $39 to make $211. So this is a pretty good reward to risk by trading that call spread yesterday and then selling a call spread today. So that's a pretty conservative way to play the earnings. And one more less conservative but very high reward to risk setup was just to buy a single call. And assuming Broadcom traded up around, let's say right around 355, earlier today at the open. If you got out right at the open, now traders were buying calls at the open for a few minutes. They did start selling the calls, but you could have made about $4,000. So risking $885 to make $4,000, a little over $4,000. Or if you held on to it, spread it off, still a profit of just right around $2,500. So a couple ways to play that in a short-term swing trade. Conservative or not conservative, not so conservative trade. All right, so let's stick with the semiconductors and let's take a look at the impact on, first of all, AMD. AMD bearish opening drive. Zoom in on this just a little bit. Flow alert comes in just at the cash open. Traders selling calls. Show them on the following orange line. Traders buying puts. Show them on the following blue line. That's bearish momentum, bearish opening drive, bearish momentum. And AMD moves lower. And then late morning, call sellers, put buyers take the foot off the gas, and AMD consolidates. Let's take a look at Bookmap. All right, so there again, that's Broadcom. Let's go to AMD now. There's that bearish opening drive. Looks like a little bit of a bullish opening print. Then a quick drop. Consolidation, there's your entry point. At VWAP there, that light blue line. Aggressive sellers start to come in. And price drops down to 150. There's your price target, 150. And looks like the sellers were not strong enough to get AMD all the way down to the 150. Those are limit buy orders in the order book, that dark red line at 150. All right, so that's AMD. No Spotgamma levels in play. Or let's take a look at Nvidia. So these are the semiconductor stocks that I follow. Nvidia, AMD, and to a somewhat lesser extent, Broadcom. All right, Nvidia, brief move higher. Full alert comes in just after the cash open. No real call buying fuel to drive price higher. There were some put sellers, and then the hedging flow quickly reversed. Traders started selling puts, buying calls, price dropped lower. And the put buyers and call sellers took the foot off the gas pretty quickly, right around 1020. You know, Nvidia trying to consolidate, trying to recover. Well, let's go take a look at Bookmap. Go to Nvidia. Tone down the volume dots just a little bit. There we go. So that brief move higher. Traders started buying puts, selling calls. Cumulative volume delta starts dropping. You can see all the magenta volume dots. And price moves down to and below the 165 level. Again, now trying to recover. And it looks like Nvidia traded all the way almost down to the 164 level. So let's go back to the Bookmap, take a look. Hero. All right, so the only Spotgamma level in play Right here is the 167.50 put wall. And Nvidia is still below that level. All right, so those are the semiconductors. And let's take a look at Tesla. Tesla was a bullish opening drive, and there was news out about Tesla before. I think this is the board had announced a new potential pay package for Elon Musk to get him focused and motivated to stay at Tesla, focus on Tesla, and up to $1 trillion in compensation in the next 10 years. And I believe shareholders may have to vote for that. All right, so let's zoom in on this. Bullish opening drive, flow alert comes in just after the cash open. Traders were pretty happy about that. Tesla breaks above the 350 call wall. And then here's a classic example of call exhaustion that happened pretty quickly. Call buyers quickly took their foot off the gas. Price stalled and then moved lower as traders started selling calls and buying puts. So classic call exhaustion there. And just like other stocks now, Tesla trying to recover from that initial drop lower. Let's go to Bookmap. Go to Tesla. All right, so again, remember 350 is the call wall. Bullish opening drive. A lot of aggressive buyers in Tesla. You can see all the green volume dots for about the first 25 minutes. Let's zoom in on this. If you missed that initial move higher, there's your pullback to VWAP. Still a lot of green volume dots. Rising cumulative volume delta starts to flatten out. Obvious target, the 355. Limit sell orders in the order book. Price did break above that, but never quite to 356. Call buyers take the foot off the gas, and price drops lower, down below the opening print. And let's see. Now Tesla back above the 350 call wall and above VWAP now. And let's check Hero again. All right, so now it looks like some call buyers and put sellers are coming back in. All right, let's take a look at a couple of other stocks real quick, then we'll get back to the indexes. So Google has also been in the news recently with the settlement of the antitrust case earlier this week. Bullish opening drive. Price breaks above the 235 call wall. So traders were buying calls, and they took the foot off the gas right around 10, just 10:11, maybe 10:12. Price had already started to move lower as traders were buying puts. Price dropped lower. So it looks like traders may be taking profits in Google. Note that it did drop down to around the last closing price, which was 232.30. Let's take a look at Bookmap. Go to Google. All right, so there's again that bullish opening drive, brief. Whoops. Trying to grab my pen tool. All right, here we go. Bullish opening drive, Buyers are exhausted. Some sellers start to come in as traders start buying puts. A few minutes later, selling calls, and price drops lower. Again, back down close to the last closing price. All right, so it looks like some traders may be taking profits in Google after the move this week. One other stock I want to take a look at is, well, I think that's it. So we looked at Broadcom, AMD, Nvidia, Tesla, and Google. All right, let's go back to the index and see if price is still, still above the key levels. Finding again support in the positive gamma zone. So let's go back. I'm going to shift the total signal. Let's go to the S&P 500. So now traders are taking positive delta positions as price is trying to find support. And let's take a look at the equity signal. Also starting to move higher now. All right, Nanny02, welcome, glad you're here. Wants to take a look at Hood, app, and strategy. Sure. So I have Hood and Bookmap. I don't have the other two stocks. So let's take a look at Hood first. And Nanny says there's talk about adding to S&P 500. I assume you mean all those stocks. Yeah, there's been some speculation that Hood would be added to the S&P 500 for quite some time. So far, it has not played out. All right, so bearish opening drive for Robinhood today. Timely flow alerts. Price drops lower, breaks below the 105 key gamma strike, down below the 101 hedge wall, and then finds support just above the 95 put wall as options traders take the foot off the gas. And that was right around the late morning, just like other stocks. So let's go to Bookmap. All right, so there's that bearish opening drive, and then attempted recovery as the put buyers and call sellers took the foot off the gas. All right, so that's Robinhood. And people, I'll get to your question in just a minute. Now, as far as Nvidia, I really, but we'll take a look at that. We'll see if we can find some clues about what Nvidia may do. All right, so that's Robinhood. And let's go back to Hero. Let's take a look at strategy. So it looks like there was a bearish move lower down to the 320 put wall earlier today as traders were taking negative delta options positions. Strategy found support at the 320 put wall and is now moving higher. All right, that's strategy. And I don't know if app is in Hero or not. No, it's not. Try one more time. No, app is not in Hero, and I don't have it in Bookmap. All right, so back to the S&P 500 now. Oh, actually, people wanted to look at Nvidia. So let's take a look at Nvidia in Equity Hub here. All right, so this is Spotgamma's synthetic open interest model as opposed to the older total open interest model. So what this is showing is positive gamma market maker. This is market maker's position in response to buy side order flow. So that buy side order flow would be retail traders, hedge funds. All right, so positive gamma, remember again, is areas of lower volatility. So this is the peak of positive gamma here, the low volatility point at 174, and then the high volatility point at 184. So the way I look at this, let's see where Nvidia is trading right now. So Nvidia is trading down right around 166 now, in this pocket of still slightly positive gamma, and down below all this strike right here at 168, which is the last large gamma bar. So kind of a not much gamma down below. Let's take a look at the total open interest model. Let's zoom in on this just a little bit here. All right, so at 166, Nvidia is trading down below its put wall, which is at 167.50, and then I would look for potential to move lower down to maybe 160, and then it looks like at that point market makers are close to fully hedged as these lines, the slope decreases. So that's what it looks like on the downside. Now, as far as what's going on today, there's no way to tell. But this is more longer term. So if you're looking to get long Nvidia somewhere around the 160 to maybe 155 to 160 may be good longer term support. Now that you may, of course, want to look at a longer term chart. All right, let's go back to Hero. Let's take a look at the indexes. So we'll wrap it up with the SP 500. Now that Hero signal has turned lower again, let's check Trace. All right, so according to Trace, SPX still on a positive gamma zone. It looks like another spread trade has come in again here at the 64.70 to 64.65. So traders are long the 64.65 call and short the 64.70. So it looks like some traders looking for reversal higher long at those strikes. So traders long and short, market makers long and short. Let's take a look at delta pressure. All right, so the blue shading is showing buying support below and red selling pressure above. And SPX stuck in somewhat of a neutral zone in between the two. So again, buying support below, red selling pressure above. Let's check Charm. All right, potential pinning target would be at, this is showing right around 64.50. So the potential pinning target pretty much lines up right at the put wall at 64.55. That's shown with the blue buying support. This is due to time decay. Buying support below, red selling pressure above. So we're looking at a level of, again, blue buying support below, red selling pressure above, and this would be the natural or most likely pin target. So it depends if the aggressive call buyers and put sellers come in toward the end of the day like they have the last couple days or not. All right, last call for questions, stocks. Back to Gamma. Wrap it up with Bookmap. Go back to ES. All right, so still stuck in this consolidation zone. All right, again, last call for questions, comments, stocks. All right, everyone, thank you very much for watching. Have a great weekend, and I will see you on Monday. Thanks again. Bye.